Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Tuesday, June 1st through Friday, June 4th, 2010. Well, let's get right into it here, folks. You can see here, this is your daily SPY chart, which mirrors the S&P 500, and sure enough, you can see over the last week or so, we have moved off the very, very lows from last Tuesday. Now, Tuesday, we had the gap down right here all the way into that 105 master level, 105, 104.50 area, which if you track it back here, folks, takes you all the way back into that February low. We touched, we pierced, we bounced off the February lows here, taking us all the way back up by the end of the week. And again, by no means was it a spectacular week. Ultimately, we ended Friday on the downside of this market with a pretty substantial loss late in the day. But again, the markets are still holding above that key 104.50, 105 level, the February 2010 lows of the year. Now, what does this all mean, folks? What are we talking about here? What's going on as you can continue to view this daily chart with all the master levels on it at this time? Overall, what you have to say to yourself, if we go to the intraday chart and talk a little bit about Friday first, is the market saw a little bit of risk in the weekend. And this is a big, big thing you need to understand, folks. Now that we're into a period where there's so much volatility, no trader, no Wall Street player, no hedge fund manager necessarily wants to hold a lot into a weekend, especially not a weekend that's 3 days long. Not just 2 days, but 3 days. Now we have the Memorial Day holiday. Again, that's Monday. And what this generally tells us is that the average trader is going to sell on Friday going into that because there's too much risk involved in holding on to the weekend, all right? So you have big positions, you're not going to want to hold into Friday close because then you have to hold for Saturday, Sunday, and Monday this weekend. And again, that means that there's added risk. There's more chance that something could go wrong between North and South Korea. There's more chance that something could go wrong in Europe with more downgrades coming in on Tuesday morning when the market opens or overnight Monday during their trading day. All these factors give us a lot of indications that this selling was a high probability into the close. And you can see right here, we actually had a good float up. Light volume on Friday. This is the intraday SPY 10-minute chart, and you floated all the way up here into 330, and then people said, there's no way I'm holding, and they sold, and that caused a very, very steep spike down in the markets into the close. The spiders ending down $1.39 on the day. That was actually a pretty significant loss. The Dow was down 122, NASDAQ down 21, S&P 500 down about 13 on the day. That was basically 1%, a little more than 1% across the board if you average it out. But in any case, folks, other issues here, you also have the Gulf oil spill has not been resolved. That is still spewing oil into the Gulf. Such a sad, sad story there. But other than that, folks, you can see the negativity out there. That's why you're not seeing people holding into weekends, and that's why we saw the late day sell-off, especially when we were basically almost to the flat line right here with 30 minutes to go, and then traders just said not so fast. Now, today is Monday. I'm doing this video on Monday. The markets are closed today, but we did have the futures trading. And the futures overall, and I'll put up the futures chart for you guys, the futures overall ended the day session here, and they closed at 11:30 a.m. Eastern Time today. So they were trading ever since 6 o'clock last night to 11:30 a.m. Eastern Time today. They're not a full day of futures trading, but about a half a day. And what you can see right here is the futures started out with a nice push up right around that 9:30 period. And this is just showing you from 9:30 to 11:30 right here. But you can see a nice push up, and then they came all the way back in, ultimately ending just slightly higher. This is where we closed on the futures, and this is where we closed today on the futures. All right, so you can see a little bit of a gain. That tells us that the futures going into the night session when they start again at 6 o'clock tonight or so, that'll be slightly positive by about 2 points and 2.25 points. So you're 2.25 up from where you closed the futures on Friday. And again, that tells us that there's a slight bias to upside, but to be honest, you do have no idea. At this point, going into tomorrow, there's nothing that you can really predict. We're going to have to watch the euro overnight. We're going to have to watch the dollar. We're going to have to watch more stuff coming out of the Middle East, a lot of stuff with Israel and the whole Palestinian thing and Gaza and all that stuff going on, folks. And it's not that that's necessarily such a big deal to the markets, but it's the surrounding countries if they decide to make it a big deal. And there's a lot of condemnation going on about what happened there over the weekend, and that could cause some problems as well for the overall markets, possibly in the coming days with oil prices and oil and obviously instability in the Middle East, possibly more risk coming into the markets as well. Over the weekend, North-South Korea, not a ton of issues going on there. I mean, there's just a lot of nonsense, but no shots fired essentially as of now. So that's a good news there. Europe, France came out over the weekend and basically said we may not be able to hold on to our credit rating. Spain was downgraded on Friday. That's part of the reason the markets were spooked on Friday. But France coming out and saying that that generally would have been taken as a slightly negative, but you didn't see the futures really react that way. So you have to brush that off for now. We'll see if tonight and tomorrow morning that comes into play even more, or if more countries are downgraded in Europe. All right. So there's a lot going on, and again, that's the reason why you didn't see traders. And personally, myself, 95% in cash right now, folks, after having one of the biggest Mays in recent history, biggest months to make that in recent history as well for the members here at In the Money Stocks. Also, No Hype Live broadcast coming out, folks. Tonight, 8 p.m. Eastern, Monday night, May 31st, 8 p.m. Eastern time, live broadcast from members of the Research Center. Again, we'll be doing a hardcore analysis of the markets, of the futures, of the news that we'll look at this week, what happened over the weekend, setting up for trades tomorrow. We're going to take care of it all. You'll be able to see charts live, listen live on your phone or on your computer to this presentation. It is going to be fantastic. You can join the Research Center. You get access to everything in the Research Center, including that now, as we continue to add more and more services for $49.99 a month. All right, folks, so join now. Be ready for that broadcast tonight. It's going to be fantastic. Now, let's go over a couple different charts, folks. We obviously looked at the futures here. Take a look at Goldman Sachs. Goldman Sachs seeing a little selling into the close, but I want to focus on daily charts here quickly to go over them. And as you can see, Goldman's still very, very sharp to the downside. One thing you have to like about this chart on Goldman, though, is it is above the 20 moving average, and as long as it holds above here and goes sideways, you're going to have bullish consolidation on this chart. That bodes slightly positive, actually, slightly to the positive side. Now, who knows where it opens tomorrow, but assuming it stays on a closing basis above the 20 moving average here, this yellow line, that would be looked at as slightly bullish. JP Morgan, let's take a look. JP Morgan's a little tougher here to read. Why? Because it rallied up nicely early in the week, or up until Friday when it pulled back, and went right into the 20 moving average. So now maybe it's consolidating. It's not as pretty a chart as Goldman Sachs, but you need to see more consolidation, in my opinion, and then possibly it could go higher. But consolidation could be downside action here, so be aware of that. Consolidation is sideways to slightly lower trading, which again, if you see that pattern, even though it's pulling back the stock, it's still getting ready generally for a springboard to the upside. So we'll watch that early in the week here on these financials and see how that goes. Let's look at the XLF. XLF, again, not the prettiest of charts. It ran into the 200 moving average. You have the 20 sloping down, but again, can we get consolidation, or are we going to head south again down to the lows down here, which again would be very, very good support if we did come down there. All right, couple other charts to go over. Exxon sold very, very sharply into the end of the day on Friday here. I want to show you the intraday sell on this thing. Look at that dump all the way down right to the 200 moving average on the intraday. 10-minute Exxon Mobil. I actually played that after hours. Quick buy right at the close and sold it for a little bit of a bounce towards the after hours session there. Bounced about 20, 30 cents on Exxon after hours, which is beautiful. But in any case, that's neither here nor there. Just another profit in the books. But either way, you can see, again, the sharp sell on Exxon on the daily. It had a little bit of a bounce from the lows on Tuesday. And remember, Tuesday we had that big sell. If we go to the SPY and we focus on the 60-minute, you can see right here that big gap down in reversal. When everyone was so bearish, ready to jump out of windows, you obviously saw a big buying opportunity. We bought ExxonMobil as a swing trade there and basically held it for a day and a half and sold it for a $1.60 profit. Unbelievable gain there. But either way, folks, good stuff. Very, very nicely done. All right, now a couple other things going into this week, folks. Watch the jobs number on Friday. I'm not going to get involved more than that. Jobs number on Friday is going to be absolutely humongous. That's what's going to be, everyone's going to be looking at for the rest of the week. Join the Research Center, guys. More plays coming out, alerts now, text message alerts, email alerts, again, spewing forth anytime there's a new update in the Hot Charts Alerts, Pro Trader, or Hidden Gems. Be ready for this week, folks. Join the Intraday Stock Chat or join the Research Center. We'll see you there. Take care. No Hype Life broadcast is tonight.